Sir, you are live now. We apologize for the delay that we had due to the technical glitches. We request you to kindly start the session, sir.
Yeah, thank you. Good evening, all of you. Today we are going to discuss on the recent judicial pronouncements given by the various high courts and the Supreme Court. As we all know that GST is hardly 7.5 years old, and still we are seeing a lot of changes coming in day and day out. And the reason could be very clear that people have started implementing it and the litigation has also started. Till date, what we see the notices being issued predominantly across the states are restricted to the arithmetical notifications only. So when we use the word arithmetical notifications, it means that differences between 9 or GSTR 1 or 3B or 2A, 2B like that. But we also have certain cases related to classification and also certain cases related to eligibility of input tax credit, whether RCM is applicable, like the Mohit Mendra's case in case of ocean freight or VKC footwear on the refunds or the Bharti Airtel judgment where the ASG has said that GST portal is only a facilitator and books of accounts are final for availing the input tax credit. Now, in this lieu of changes being announced day in, day out, and the judgments being given out, it becomes very critical for all the professionals, taxpayers, as well as where we are employed to take care of these latest changes and fine tune the business processes. Now, what will happen if I don't change my business process? It's going to impact the eligibility of my input tax credit. If my input tax credit eligibility is impacted, that means my working capital is impacted. I need to fork out in additional cash to discharge my tax liability. The buck does not stop there. It also has an impact on my profitability. If I'm not eligible to take input tax credit, as per the accounting standards, it is very clear that we need to charge it back to the expenditure account. The moment my expenditure is increased or inflated because ITC is not being claimed, then my profitability is going to come down. If my profitability is coming down and if I'm a listed entity, my stock prices will have an impact. When my stock prices have an impact, again, it is a different ball game. So everything is interconnected and we need to be very, very careful when it comes to the interpretation, implementation of GST provisions. In light of this, today I would like to discuss with you all few judgments which are very, very key and crucial for day-to-day operations. One of the most awaited judgments by the professionals and the trade is on the safari retreats. Now, giving a background on the safari retreat judgment, it all started with the Orissa High Court judgment. Now, these guys, Safari Retreat Private Limited, they wanted to take input tax credit on the construction of the material and services used for the mall. Now, when a mall is constructed, there will be huge amounts of steel, cement, electrical fittings, sanitary fittings, architectural engineers, fees, services. So much goes into the cost of it. And for these guys, it was almost 34 crores, which they could claim the input tax credit. So after the construction of the mall is over, they're given the mall on rent. Now, when a mall is given on rent, it is treated as supply of services by virtue of my Schedule 2 classification. Now, being a service, it has to be taxed under supply. Rent is under part of supply under Section 7. So GST is applicable in the outward supply. Now the question comes on the availment of input tax credit used in the construction period. Now, can I use that input tax credit? The answer is yes, as per the interpretations for some people and no for some people. When we say some people, the trade and professionals say it is eligible, but the department says it is not eligible. So in such matters only we go to the court of law to get a clarity. Now the Safari retreat guys have filed a writ petition in the High Court of Odisha, and the court has clearly said that making input tax credit ineligible or non-availability on the construction costs and services incurred for the mall will break the genesis of GST, which is seamless flow of input tax credit across the supply chain. And the whole concept of GST revolves is only the end user who is unregistered person in majority of the cases will bear the cost of the taxation. But in this case, what is happening is Safari Retreat is a registered taxpayer and their tenants are also taxpayers. If input tax credit is disallowed or not allowed, then it defeats the whole purpose of GST. So on this basis, the Odisha High Court has given the judgment in favor of the Safari retreats. Aggrieved by this, the department has filed a petition in the Supreme Court of India challenging the order given by the Odisha High Court. And at the same time, it is also challenged the constitutional validity of various sections of the GST. Now, if all of us are aware of the blocked credits, which are part of my section 17. So in section 17, we have two distinct clauses, 17.5C and 17.5D. The verbatim used is very, very important. When we were kids, we were taught grammar. But in those days, we studied grammar only for passing the exam. But when it comes to the litigation and day-to-day business, every comma or phrases like and or will have an impact on the interpretation. Now 17.5C talks about plant and machinery. 17.5D is talking about plant or machinery. Now grammatically, there is a variation. And is used means both the things have to be met, the conditions have to be met. But when a person uses the word or, it means either of its conditions can be met. Now in this context, the petition has been challenged. The other context is whether 16.4 is constitutionally valid or not. Of course, when the Safari retreat judgment came, we never had 16.5 being making into place. But if we keep that alone, if you take the construction of a mall or any greenfield project which runs over a period of years, then availing input tax credit can become a challenge. So they even challenge the constitutional validity of section 16.4. Now here, if you see practically, eligibility for input tax credit is given through a statute, which means it is an additional benefit given to the taxpayer, which also means that this can be done on restrictive basis also. So giving input tax credit need not be a statutory or a constitutionally valid. There can be certain restrictions. In lieu of this changes and challenges, the whole judgment goes there. And the Safari retreats people have said clearly that it is violation of Article 14 because it is restricting the input tax credit. And again, the difference is plant and machinery or plant or machinery. Now, let us say, for example, if I'm constructing a factory building, that means I'm using it on my own purpose. So in such cases, the treatment should be different because I'm not generating any revenue directly from that factory building. Now, if I'm constructing a mall or a hotel, then I'll be generating revenue directly by letting it out. That means on account of it is not there. So the whole intent or the argument is when it is used for different activity, not for the own purpose, then input tax credit should be eligible or available. And as we discussed, if it is between B2B transactions, if ITC is made ineligible, then it is going to increase the cost of the goods or services, and it is against the genesis of GST, where the input tax credit is broken in the supply chain. Now, when it comes to the government's intention, again, it said that whether you build it for your own or letting it out, there will not be any difference. Now, what happens if there is no difference? That is the biggest question we have here. In the first case, what we discussed, construction of the factory, I'm using it for producing other things basically. But in case of hotel or cinema theater or a mall, I'm letting it out. That differentiation is not being taken or given specifically in the provisions of the Act. And same thing the government also said here that has been discussed in VKC footwear. It is a permission or a special sort of legislative power given by the statute for the taxpayer to avail input tax credit, and it is not a constitutional or a fundamental right. By invoking this, the message is being passed on clearly stating that ITC is eligible or made available based on certain restrictions. And another thing, the ASG who was represented on behalf of the government of India has said that the courts cannot come into the legislative choices based on fiscal matters where the acts have been enacted in the parliament. If the court start reading it and interpreting a different manner, again the law has to be revisited. So these were the defense of the government. Now, when it comes to the plant and machinery or plant or machinery, now if you read the judgment, some interesting facts are coming out of that. In November 2016, we had July 2016, we had the model GST law. When the model GST law came into picture, across the model GST law or the GST Act, they use the word only plant and machinery wherever it has been mentioned. Whereas when the final act was passed, at almost 10 places they use plant and machinery, and specifically in 17(5)(d) they use the word plant or machinery. So the argument of the defense here was that the intent of the legislature is very clear that plant and machinery and plant or machinery are both are different. But when it comes to the arguments of the ASG on the same point, they have said that it is a typographical error. When it has been clearly mentioned as plant and machinery in 10 different places, then the intent of the law is that it on the 11th occasion also it should be plant and machinery, not plant or machinery. See how the facts are turning here basically. The argument by the defense here is it has been used differently in 17(5)(c) and 17(5)(d). But when it comes to this interpretation, they're telling that since it is different, it is the intent of the lawmakers. That is why they're given separately. But when it comes to the arguments from the government side, they're telling that the intent is to remain same across the act and it is a typographical error. Now, if such a thing comes into picture, then the act has to be amended, or else this will lead to again certain level of confusion. The next important thing where the courts have referred repeatedly is on the functionality test. Now, in the case of Taj Hotels in Secunderabad, the IT80, the material used for sanitary fittings, can it be treated as a plant? It has been struck down and said that it is not a plant. In case of Anand Theatre, similar judgment has come out actually. So now what constitutes as a plant has to be defined based on a functionality test. Now, when the functionality test is not invoked, then it cannot be directly classified whether it will fall into the plant or machinery or plant and machinery. Now, if you go back to the direct taxation law, it is very clear that the eligibility for claiming depreciation, for claiming investment benefits, the treatment is different. Now, if you see in the GST Act, the word plant or machinery has been not defined. At the same time, the General Clauses Act has also not defined whether what is plant or what is machinery. Now, in absence of such definitions in the Act, then we have a recourse only to go back to the general definitions, what is plant and what is machinery. Now, if you see the fundamental difference between a plant or machinery or plant and machinery with respective to buildings, a distinction can be drawn. A building cannot be moved from one place to another place. That is why it is termed as immovable property. Whereas plant can be installed with support of the foundation going 5 feet or 10 feet into the ground and affixed by panels or by screws or something like that to make it stable so that vibrations don't impact the machinery. Now the machinery can be relocated with minimal cost and the plant and machinery not losing its essence. But can we do the same thing in case of buildings? The whole intent here is going that buildings are immovable. Keeping that apart, today we have technology where we can even relocate buildings also. Yes, the cost and other factors also needs to be considered. So the moment if I'm able to move building from location A to location B, then does it become an immovable property? That is the biggest question which we all need to answer that. If it is becoming an immovable property to movable property, then the whole essence of claiming input tax credit under GST will go for a drastic change. So I'm yet to see any judgment where it clearly says that buildings is a mobile property and not an immovable property with latest technology in place, keeping apart the cost involved in the movement. So even the courts are also very clear in multiple places and stating that they don't want to interfere into the legislative things. That is a welcome move because these acts have been passed in the parliament or the assemblies and then only they're brought into use actually. Now the courts have clearly said that section 17(5) and 17(d), whether usage of or and does not constitute to violation of Articles 14, Article 19, 1G or Article 300A. The reason is the petitioners has not put up sufficient evidence to prove that these are violation of the articles. So in absence of any proofs or evidences, the courts will strike down such matters actually. Now coming to the section 16(4), The courts have again agreed, said that issuing a time limit for availing ITC was not found to be arbitrary or discriminatory. Again, going back to the logic that ITC is a provision given or a facility given by a statute, which means that statutes also have a power to restrict ITC eligibility on certain conditions. Now, coming back to the interpretation of plant and everything, what is to be done now here is the functionality test. Whether it is can be really classified as a plant. Once it is classified as a plant, then the determination for availing the input tax credit comes into picture. Now, for discussion purpose, if the shopping mall is considered as a plant, then the inputs used for it can be considered for discharging the output tax liability when the shopping mall is given for rent. Now, if you see in the judgment, one more important thing discussed here is the moment the building gets the occupancy certificate, it is no longer treated as a supply. So when I sell the building after receipt of occupancy certificate, there is no GST applicability on that. But if the same building is given on rent, which is classified as a service in Schedule 2, and rent is part of supply as part of Section 7, then GST is applicable. So that brings in the complexity there. If I sell it, GST is not applicable. If I rent it, GST is applicable. Now, how do we handle this matter? The argument here is, since I'm letting it out and not selling it, ITC should be made available. Now, if I need to make it available, it becomes a challenge. See, from a hypothetical perspective, I have constructed the shopping mall and I have given on rent and it has met the functionality test and I am taking the input tax credit. So through the construction phase, my ITC got accumulated to say around 50 lakhs. And in the first year of giving it on rent, I've utilized only say 10 crores of it. 50 crores has been accumulated and 10 crores has been utilized in the first year. Now, second year, if I decide to sell the plant, here when I say plant, I mean to sell the shopping mall. What should happen now? Should I reverse the balance 40 crores input tax credit? And also the 10 crores what I have utilized, should I also reverse it? Because the moment I sell the building, because the occupancy certificate is received, GST is not applicable. So that brings in another dimension or complexity on this matter, basically. So we need to watch out for such challenges also. Now, when it comes to the judgment implications, the court has clearly said that, or it has remanded matter back to the Orissa High Court, stating that whether the shopping mall will meet the definition or the functionality test of plant. If yes, then only input tax credit should be made available. If it is not meeting the functionality test of plant, the shopping mall, then input tax credit will not be made available. If that is the case, today you're working for a company or your client comes to you and asks that what should we do? Should we take the input tax credit? The moment I take the input tax credit and start utilizing it, and tomorrow, for God forbids, if the judgment is against it, the moment I have utilized input tax credit, I need to fork it out or reverse it along with interest. it is an additional burden for me. If I do not claim input tax credit, and tomorrow if judgment comes in the favor of the industry because of the virtue of section 16(4), I'll be losing the input tax credit. By 30th November of the next financial year, if I don't take the input tax credit, I'll be losing my input tax credit. So the professionals are in a real fix what to advise the clients. Now, let us assume I tell my clients to avail input tax credit. Now, the moment I avail it, if I don't utilize it, then it is good. But if I start utilizing it, it is a challenge. Now, again, utilization is not based on my discretion. Whenever I'm filing my form GSTR 3B, input tax credit utilization is already predetermined and hard coded in GSTR 3B. First, my input tax credit of IGST is exhausted, then CGST, then comes SGST. So we need to keep that point also in mind. In case if you tell your clients or org where you're working, we can avail input tax credit, but the challenge associated with it comes into utilization. Number two, I have a lifeliner here. If sigma of all my three taxes is greater than what I'm not supposed to use it, and tomorrow if I get an adverse order, then I need not pay interest. When I say sigma of all three taxes at any given point of time, the sum of CGST, SGST, IGST should be greater than the input tax credit, which I'll be eligible or may not be eligible at any given point of time. That means which I have availed it on my construction period. Still awaiting the functionality test. Now, one is clearly the functionality test to be passed by the Orissa High Court. Now, what will happen in cases like my warehouses? Now, because of the Viksit Bharat and the Sagarmala project and the connectivity and the dedicated freight corridors coming up in place, we are having grade A warehouses coming up across the country. Now, what should I do for the construction cost related input tax credit? Should we take ITC? Should we not take ITC? That is one example. Or let us come into the sericulture where I'm farming shrimps, where I need to have a pond. In that case, is it considered as a plant or not? Or I'm constructing an electrical power plant where I use turbines to generate power. It need not be a commercial power plant. Even in a steel plant, greenfield steel plant, we have the captive power plants. So what should I do with that? I'm constructing a hotel. I'm constructing a movie theater or a multiplex, or I'm constructing a convention center. In all these cases where I'm giving on rent, this question is going to haunt us. So as a professional, we should tell the clients very clearly what will be the implications and how to safeguard it, and at the same time ensure that they're not deprived of the ITC on that matter. Because we have seen it, if ITC is deprived, the implications, though I may get income tax benefit of depreciation, but my cash flows are impacted. My profitability is impacted. So it's like a double-edged sword for a professional if somebody comes and asks, what should I do in lieu of this Safari High Court judgment given by the Supreme Court of India? So we need to take a very calculated and based on the facts, we need to take decisions. It is not that a single size fits all basically. We need to get into the nitty-gritties of the transaction, the implications, then only give a proper answer with caveats, provided that functionality test is met. Now I have a straight cut case in case of commercial buildings or the shopping mall. But what about others? Because when you are into the profession, either as an employee or as a consultant, you come across all these challenges. So you need to be very careful on this before you take any conclusion. In fact, people were awaiting that the Supreme Court judgment will give a clear cut judgment whether ITC is available or not available. But for a surprise, including me, it has been remanded back to the Odisha High Court, asking you to meet the functionality test before making it ITC eligible or not. So these are the business implications which we should be very careful and aware of it. The next important judgment which I am going to discuss now is on the availability of SENVAT credit on mobile towers. Though it is not directly related to GST, but we have seen multiple cases where input tax credit under GST has been disallowed in case of prefabricated buildings. Now, when it comes to the prefabricated buildings, it is very clear that I can install it and then I can uninstall it and move it to another place. But by the virtue of the definition of works contract given in section 2 subsection 119, anything which is affixed to the land is treated as a works contract. And by virtue of that, if input tax credit has to be availed on works contract, my furtherance of business also should be works contract. On these grounds, we have seen multiple orders being issued or the taxpayers being advised to reverse the input tax credit on prefabricated buildings. So SENVAT credit rules 2004 also had certain restrictions on eligibility or availing input tax credit on certain goods and services. To just give you a recap, in case of inputs, that means the input should be clearly visible in my product directly or indirectly. Now let us take an example of glue, which is used in attaching the insole to the shoe. Is it directly visible for me, the glue used? At a certain point of time, it dries up, but it sticks the insole and the shoe upper portion. Now, can glue be considered as an input? Yes, it can be considered because it is directly visible in the product, but not visible at the time of usage. Now, when it comes to the capital goods, the only distinction is like plant and machinery, or you have certain chapter heads like 84, 85, 87, 89, where items falling under these chapters only are treated as capital goods, and the eligibility conditions for availing input tax credit is 50% in the year of purchase and 50% in the next financial year. So this is the background on the SENVAT credit. Now, again, this is a matter of litigation. And when it comes to litigation, it is purely related to interpretation. Now, whenever you go into the litigation, we show up cases in the reply to the show cause notices or while filing an appeal, the judgments which are in favor. Similarly, the department officers also will quote judgments in their favor. Now, whose judgments will prevail? That is the biggest question we have. So ultimately, the Supreme Court judgments can override the other places. But if in absence of any Supreme Court judgment, then it becomes a challenge. We can only draw the jurisprudence from those respective high courts, which in the jurisdiction which I'm not falling into that particular high court. So this point also has to be kept in mind. So in this case of prefabricated buildings, the Bombay High Court has categorically said that Senvat credit is not eligible. Whereas the Delhi High Court has said that Senvat credit is eligible on prefabricated buildings and mobile towers, even though they're treated as capital goods. Now, when there is a dispute where you have a contradictory judgments passed by two different high courts, then the only recourse we have is with the Supreme Court. The Supreme Court has clearly upheld the decision of the Delhi High Court and gave favorable orders to Bharti Airtel. Now, what are goods? That we need to see the definition. Now, the moment we say goods, should I refer to the definition in general to the definition given in the GST Act, or should I refer to the Sale of Goods Act? The answer is refer to the Sale of Goods Act, as the term goods has been not defined in the CGST Act. What is defined in the CGST Act is only input services and capital goods. So whenever you have any dispute on place of supply, you can easily go take shelter sometimes under the Sale of Goods Act and also the General Clauses Act. So if anybody wants or wishes to practice in litigation, it is not only the knowledge of the GST Act, but the allied acts is also required. Then only we can survive in the field of litigation. Now coming to the goods, what it says is anything which is movable is a good. Anything which is movable means which is immovable is not treated as a good. That's good definition, right? Like services definition in GST. Anything which is not good is a service, right? So we need to be very careful on this. The next immovable property, it is taken definition as includes land, benefits arising out of land, and things attached to the earth or permanently fastened to anything attached to the earth. So we need to be very careful here, the verbatim used. Permanently fastened. That means you cannot remove it and you cannot move it from one place to another place. Attached to earth. Here it is defined as rooted in the earth, embedded in the earth, or attached or permanent beneficial enjoyment of that to which it is attached. Now, with the latest advent of technology, will the buildings be part of my immobile property? That is the litmus test or the acid test which the courts have to jump in and give us. Now, how does the court has determined here whether it is a movable or immobile property? It has discussed or it has relied on four distinct points. which is again the genesis for the Central Excise Act. Predominantly, we can draw it from there. Nature of annexation, object of annexation, intent of parties, functionality and marketability. Now, when it comes to the nature of annexation, it clearly says that how firmly it has been attached and can it be removed without any damage or without major damages. If I'm putting a clamps and attaching to the ground, an L clamp, if I just unscrew it, it can be removed easily. And the next test is object of annexation. Now, when it comes to the object of annexation, whether it is for a permanent beneficial enjoyment or it is used to facilitate. Now, when it comes to my prefabricated buildings, maybe in the construction of the greenfield projects or in case of highways or express highways or in the metro projects, we could see that, right? Prefabricated buildings are being attached there with the intent to do the administrative work. But in case of mobile towers, cellular towers, its intent is to generate more revenue because these mobile towers will capture the airwaves, basically megahertz, which has been allocated to them, whether it is a 4G or 5G or 2G or 3G, the bandwidth, what we call in the telecom language, and that will be passed on to the mobile consumers. So without that mobile or cellular tower, if the connectivity is low, then the mobile company cannot function or generate more business. So this is what is the interpretation they've taken here, because this judgment talks about prefabricated buildings as well as mobile towers. Now, what is the intent of the parties? Whether it is to be given permanently forever or can be removed at a later point of time. Now, when it comes to the mobile towers, it is very clear that these cellular operators, they do not own the land where they install these towers. They take it on rent. If the rent agreement or the lease agreement of 5 years or 10 years above the residential building or a commercial building is over and the landlord does not intend to renew the contract, the mobile operator does not have a choice other than removing that cellular tower from that particular place and install it in another location. So this is purely a temporary use basically, because I'm not using it forever there actually. When it comes to the prefabricated buildings, once my project is over, I'll just remove it and take it to another place and reuse it again. And in central excise, another important thing is on the marketability. It should be dismantled and it could be relocated and it should be marketable. That means I should be able to sell it. So if these 4 conditions are met, then or based on the answers what you give for these 4 conditions, then that can be classified as a movable or a immovable property. So this is what we have exactly discussed previously. The prefabricated buildings or mobile towers are not permanently annexed. They can be easily dismantled and relocated. I can easily sell them once I dismantle it. And with that, I'm increasing my operational efficiency. This is what we discussed precisely in the previous slide. So since it is related to central excise, I do not want to just go into the depth of it, as many of you may not be aware of it. So before the judgment is passed, the Honorable Supreme Court has considered various aspects like the definition of input, usage requirement, indispensability, nexus with output, and SENVAT credit provisions. So definition of input means anything which is used for providing an output service. Usage requirement, again, it relied on the interpretation proximate, not remote, in connection to the output service. Indispensability, essential for effective mobile services. Nexus with output, close proximity to signal transmissions. SENVAT credit, finally it said that it is treated as eligible input for availing the SENVAT credit. So what is the outcome of the Supreme Court judgment? I am eligible to take input tax credit on prefabricated buildings. So if somebody says prefabricated building or a temporary structure is attached to the land and it falls under the virtue of definition of works contract, you can defend this taking the jurisprudence from this particular judgment. There was a circular also given by the CBIC stating that input tax credit is not available in case of mobile towers and prefabricated buildings. By virtue of this Supreme Court judgment, that circular cannot be enforced as of the time being. And when it comes to the judgments given by the Supreme Court, which means it is binding on everybody, and department circulars will not have any say on the court's judgment. So we need to be very careful here in this matter. So jurisprudence can be drawn from here and challenged at the adjudication stage or in the appellate stage, first appellate stage, or in the tribunals. If not, we have to knock the doors of the High Court or the Supreme Court. Again, here, friends, please keep in mind everything is determined based on the cost benefit analysis. Should I go for litigation or should I not go for litigation? If my cost of input, if the input benefit which I'm deriving is only 1 lakh and cost of litigation is 5 lakhs, it's very clear that my cost benefit analysis is telling me not to go for litigation. But if it is vice versa, that means 5 lakhs is the input tax benefit which I'm going to get and 1 lakh is my litigation cost, then it is worth to take up or embrace litigation. So you need to take a calculated decision. And during that period, ensure that usage of input tax credit, which is under dispute, is not completely utilized. If it is utilized completely or partially, like what we have discussed previously, which is below the closing balance of input tax credit is below the disputed amount at any given day, then interest has to be paid. Now here again there is another school of thought. Should interest be paid for the days where it is below the threshold limit or the sigma of all the three, or from that date to the date of reversal? There are various appeals filed and pending for the orders, and in the high courts also on this matter, judgments are yet to be passed by the high courts. Say, for example, my input tax credit, which is under dispute of all three, is say 75 lakhs. First year, all 365 days, if I add C plus S plus I is above 75 lakhs. Second year, it is above 75 lakhs. Third year, in a particular month, say in the Feb of third year, it has gone below 75 lakhs. Say it is touching at 64 lakhs. Again, in the fourth month, it has become above 75 lakhs. So should I pay interest from the third year, second month to the date of reversal, or only for that particular month? That is where the interpretation is coming into picture. So you need to factor all these things before you take any judicious call. The next important judgment is on the Guwahati High Court in case of the notifications passed. As we all know that GST is based on a model of cooperative federalism. Now, what is this cooperative federalism? It is done through a machinery or a body called GST Council. GST Council gives recommendations to the government, and based on the recommendations of the GST Council, the amendments are enacted, notifications are passed, or circulars are released. So far, so good. Now the question comes, are the recommendations of the GST Council to be mandatorily accepted by the government? The Gujarat High Court in the case of Mohit Minerals has categorically and clearly said that the verbatim used in the act is government may on the recommendations of the GST Council. The usage of the word may means the government can enact or need not enact based on the recommendations of the GST Council. But to date, we have never seen anything which clearly has been recommended by the GST Council and not passed by the government. Yes, because of certain procedural delays, the recommendations are yet to be implemented. But once the decisions are given and which are part of the finance bill, they have been predominantly kept into activeness by passing of those things in the parliament. Why we have to go for cooperative federalism? The answer is very simple. Because our constitution clearly talks about the powers of collecting taxes between the states and the center. So Article 246 has been introduced as part of the 101st Constitutional Amendment Bill for granting concurrent state to Article 2A establishing the GST Council. Now, Section 168A has been specifically carved out, which clearly says that it is being introduced basically extending the timelines in special circumstances. Now, if I go to Section 73, Section 74, the timelines are very clear for which the orders have show cause notices have to be passed. Of course, from 1st April 2024, 73, 74 has been taken over by 74A. Now, 74A means meeting or putting both the equals and unequals at the same page, basically, or at par. Keeping that apart, when I come back to the GST for 73, 74, especially during the pandemic period. Now, if you go back to the initial days of the rollout of GST, there was a clear-cut indications or mandate from the Finance Ministry that tax officials should not go and harass the taxpayers. Because of the initial years of rollout of GST, there are interpretation issues, knowledge issues, implementation issues. To make it smooth and simple for implementation, this decision has been consciously taken. And when the government wanted to start implementation of enforcement, we all have passed through that phase of pandemic 2020. Now, 2020, the pandemic has created chaos in most of the lives and the economies have collapsed and countries are yet to bounce back. Now, coming back to here, the notifications have been issued for extending the timelines, stating that it can be issued only if there is a force majeure clause, backed by the notification is stating that if any of the actions cannot be completed, which means issue of a notice under 73 within 3.5 years from the date of filing of the annual return. If that is not completed, it should be recommended by the GST Council. And on recommendation of the GST Council, government should clarify it, government should notify it formally. So this is what has been clearly given in section 168A. So far, so good. But what happened to this notification number 56/23 of central taxes? The petitioner contends here that for the year 1920, notification 56 has extended the period for issue of notices. And he says that this notification has issued without being recommended by the GST Council. And the notification has misrepresented that GST Council has recommended it. Number 3, it failed to establish force majeure conditions, which is mandatory. Now, force majeure clause is evoked or invoked in cases where it is not manageable for a person to do, like natural calamities or pandemic. Now, for extension for 1920, when it was extended, the pandemic has already been done and dusted. So in such a case, giving an extension for 1920, invoking this particular section 168A does not sound good, is what is the contention of the petitioner. So again, 168A, it is only a recommendatory in nature. But if you see here for 1819, it has been accepted and that force majeure conditions were there. But 1920, that were missing. Those were missing actually. So before passing the judgment, the court here has analyzed the judicial prudence, basically jurisprudence based on the Mohit Minerals judgment. So whether all recommendations are binding on the GST Council, by all recommendations given by the GST Council to the government are binding? They are not, but the recommendation is still required to be given under section 168A. So in this case, there has been no recommendations given and the force majeure conditions are also not met. So what are the conditions we have discussed here basically? So based on this, the notification number 56/2023 has been declared ultra virus and set aside, which means that all the orders issued which were adverse to the taxpayer, where he had to pay any tax liability, interest, or penalty itself does not stand in the court of law by casting of this notification by the Honorable High Court of Gujarat. If that is the case, what should we do now? Yes, in Guwahati, that order has been passed by the Honorable High Court that all orders issued under notification number 56 are ultra virus. What happened to other states? Is the judgment of Guwahati High Court binding on all other states? The answer is no. It is applicable to the jurisdiction of Assam only. Now, as we discussed previously in case of prefabricated buildings and also in the case of mobile towers, Delhi High Court has given a favorable order and Bombay High Court has given an adverse order. Similarly, the Patna High Court has upheld the notification number 56/2023. Now, it is giving a weapon to the department, to the taxpayers and the professionals who are challenging the order itself based on the Guwahati High Court judgment. Various writs also have been passed in various high courts and orders are yet to be passed by the courts. We need to wait and watch. Now, here two consequences which I'm keen and observing is whether the department has filed a writ petition in the High Court, in the Supreme Court, challenging the Guwahati High Court judgment. And in case of the Patna High Court judgment, whether the petitioner has approached the Supreme Court. I'm keenly waiting for these two observations. Next important judgment which we are going to discuss is on the GST classification of hand sanitizers. Now, though the title may look like classification of hand sanitizers, the impact or the discussions which we are going to do is totally different. Here the Bombay High Court has set aside a press release issued by the Home Ministry during the pandemic period, which has classified hand sanitizers as disinfectants and the tax rate was to be levied at 18%. Now, basis on that press release, the adjudicating officials have passed orders. Now, what is all this? How it has been set aside is what we are going to discuss now. Now, the petitioner is in the business of making sanitizers, or you call them as hand rubs and antiseptics. Those are used in the pharmaceutical aids in hospitals. That means they're predominantly used in the hospitals. When you visit a doctor, he normally cleans his hands, right? Pressing a bottle. So those are called hand sanitizers, which all of us are aware of it after the pandemic. Before that, hardly any of us are aware what is sanitizer. But now today it has become in our daily practice and we're using that. And the Minister of Finance, sorry, it was Minister of Finance, not Minister of Home Affairs, that sanitizers have to be classified as disinfectants and they'll be attracting GST of 18%. Now, if you see here, hand sanitizers, one is alcohol based and other is non-alcohol based. So the press release clearly stated that alcohol based hand sanitizers only to be taxed at 18%. So based on the press release, a show cause notice was issued by the adjudicating officer on April 17, 23, demanding the petitioner to pay differential tax, interest and penalties. Now, the main challenge, the grounds of argument by the petitioner is validity of press release, classification, and contradictory government position. I'm sure that many of us have received notices for excess claim in 2B compared to 2A, sorry, 3B compared to 2A. And we all gave replies referring to a press release issued by the CBIC, stating that for the year 17-18, it will not be considered and credit claimed in 3B is final. All of us or many of us have relied on this press release, right? While replying to show cause notices or filing appeals or even at the time of filing of writs in the high courts. But in this case, the petitioner is challenging the validity of the press release itself. So had we taken a correct stand of the press release is the question mark now. With this, it comes to my mind. Next question is on classification. The petitioner claims it is not disinfectant because it is used by hospitals before surgery and after that surgery for cleaning and ensuring that there is no bacteria or infection getting into it. It is to be treated as a medicament basically. And it should fall under that respective HSN code. Now the third point is contradictory positions. So here he wants to highlight the stands taken by different government departments on classification of hand sanitizers. Now, these are the grounds on which the petitioner has challenged. Similarly, the way it has been challenged by the petitioner, the government also comes into picture and they also counter the challenges given by the petitioner. So the government has come up and said that under Article 73, they are empowered. That means they are here means I'm using it is referring to the union powers, basically the union government, to give executive orders through press releases. They said it is very much within the four walls of the law. And they maintain that these are disinfectants and the tax rate is to be attracted at 18%. Sorry, it is a typo here, it is 12%, but not as medicaments basically. If it is a medical purpose, then the tax is 12%. If it is disinfectant, the tax rate is 18%. And another stand which is taken is they have the option to go to the adjudicating authorities and alternate remedies available. Before exhausting them, they have reached the High Court for justice. So the government side has put up its contentions very clear, basically. The court has evaluated whether the press releases are valid or not. So the court noted that the press release did not indicate compliance with Article 73 or 77 of the Constitution. Which means it is very much doubting the exercise of executive power. And another logic which the court has taken is that there is a separate power between the departments or judiciary or authorities to classify a product, basically. The court has categorically said that it is not the executive power to classify the product, whether it is a medical one or a disinfectant. And the court also held that executive powers cannot be extended beyond the parliament. And the court has also considered various judicial pronouncements also, basically. So again, as in Mohit Mineral case, the Parle Agro Limited case, which has again pointed out that GST Council's recommendations are not binding on union and states. And they have also relied on one of the judgments given in case of Commissioner of Income Tax versus Autofin Limited, where it has been categorically held that circulars without statutory authority cannot override statutory provisions. So many a times we see that when adjudication orders are passed or circulars are contradictory to the provisions of the law. So in such cases, we can take shelter under this and get an order in our favor. And the court also had its own interpretation, basically, and held that executive cannot have the power even after an enactment through a legislature, basically. So once the act is passed, then executive powers cannot be imposed on that. And interpretation of the law is the role of the judiciary. And it has said that we respect the separation of powers. And the court has again categorically clearly said that administrative instructions or circulars are not binding on the courts or quasi-judicial authorities. The circulars are issued only for enabling the department officer to do the processes in a standardized manner across the country. So wherever you come across, you can say that circulars are not binding. We can refer to this. So what is the court's decision finally? The court has set aside the press release issued in 2020, classifying hand sanitizers as disinfectants. And what does it mean? Independent adjudication is in place. Adjudication cannot be influenced by press releases. And the court has not set aside the show cause notice, but it has told that it should be pursued independently. That means without considering the press release, the adjudication should happen. Now with this, what is the learning we have is when we had this 2A 3B differences, we always relied on the press release. That means this press release is an executive order overriding the legislative provisions. So this is an eye opener when we get into litigation, not to rely on press releases or circulars, and also instructions being issued by that board from time to time. We need to be very, very careful on these matters. Now, uh, the last case which I'm going to discuss is on e-way bill. Now, we have seen that in GST, lot of vehicles have been detained time and again, even though all documents are in place. Very flimsy, on very flimsy grounds, the vehicles have been detained for days together. During the movement of goods, at the time of inspection, the officer's role is restricted only to see whether the consignment is accompanying with a valid e-way bill and corresponding documents attached to that e-way bill, like my tax invoice or delivery challan or bill of supply. Other than that, they should not get into that. We have seen cases where detention has happened on the grounds of valuation. The goods have been undervalued. The courts have heavily come down and said that valuation cannot be a ground for detention of vehicles. The courts have repeatedly said that if there is no mens rea, that means if there is no intent to evade tax, vehicles cannot be detained and penalty cannot be imposed. There are humpty number of judgments on these matters, but unfortunately, we are still facing these challenges on the ground level. Keeping those matters aside, the Supreme Court has given very clear instructions, even errors on e-way bill. When I say here errors, the Supreme Court has clearly said that be careful on what you do. If there are any mistakes, face the music. That is what is the intent of the Supreme Court here. So when we go to the background of the case, the petitioner has imported goods from USA, that is his parent company. And when the goods are being shipped from Mumbai to the destination, the clearing agent has mistakenly or wrongly, earnestly given the recipient name. And what did the authorities do? They have detained the goods and levied tax and penalty on the grounds that goods are being shipped to another address which is not mentioned in the e-way bill. Now, giving a wrong address, is it a mens rea? Is the biggest question I have. Now, if I'm supposed to move goods to Karnataka, but if I'm moving goods to Tamil Nadu because I've given the wrong customer name, tax has been paid here, but does it amount to mens rea? Is a questionable thing. The reason is the place of supply is Karnataka, but goods are being sent to Tamil Nadu. GST being a destination based taxation, The tax benefit is enjoyed based on the state code what is mentioned in the place of supply. Now that amount should go to the state of Tamil Nadu. On the wise it is mentioned as Karnataka. Now the revenue will go to Karnataka. Now here there can be another possibility. On my tax invoice, it can be mentioned correctly as Tamil Nadu, but on the e-way bill, it must have been mentioned as Karnataka. If that is the case, then there is no mens rea, I can say. I can clearly say that it is a procedural lapse or a clerical error and take a shelter. But on the contrary, if it is the other way, then it can have significant implications. So after the vehicles have been detained, an appeal has been filed by the applicant and the appeal got rejected because the address mentioned is not matching with the address given in the shipping bill. And the appellate authority has clearly said that it is not a clerical mistake. On these grounds, the appeal got rejected. Aggrieved by this, they filed an appeal in the High Court. The court has considered it as a clerical mistake and quashed the orders passed by the appellate authority. But the department has knocked the doors of the Supreme Court against the orders given by the High Court actually. The Commercial Tax Department of Madhya Pradesh has filed a special leave petition and the court has dismissed the petition, stating that it does not want to entertain special leave petitions under Article 136. So here we need to be very careful. Clerical errors should be avoided as far as possible, else it can lead to huge penalties. Now, when we are having generating e-way bills, we need to be very careful. If my e-way bill has expired and I'm generating it or I'm not generated, does it amount to clerical error? No. I'm supposed to put customer's A's location. I've updated customer's B's location. Is it a clerical error? In one of the judgments in case of TTK Prestige, they're supposed to put the factory address, the supplier, but has kept the address of the head office in that particular state, regional office address. Since it is going to the same recipient there, the court has treated it as a clerical error. If I give HSN code wrong on my tax invoice, can the vehicle be detained? And can I come out stating that it is a clerical error? It is a mixed answer. First and foremost, vehicle cannot be detained on the grounds of wrong HSN code. So I may escape there, but the same intelligence or the information can be passed down by the inspection authorities to the adjudicating officer of the supplier or the recipient, and notices can be issued. So that is a classification. When my HSN code changes, it will also change my tax rate also probably. So and 18% can become 12%. So there is under or lower tax rate is being paid. So that can have huge ramifications on the process. So we should be very careful and try to adopt technology wherever possible. Now today, in case of movement of goods, now the threshold limit for issue of e-invoice is 5 crores. So the moment I generate my e-invoice, at the time of generation of e-invoice, I can also generate my e-way bill. So the information, whatever is there on the e-invoice will be replicated on the e-way bill. So integration is need of the hour. Many of the taxpayers, big or small, I've seen even taxpayers with turnover of more than 5,000 crores are using Tally. So Tally gives a very good provision or option of generating e-invoices also. When e-invoice is generated, I also have an option to generate e-way bill. Let's say part A can be generated. Part B details of the generation of e-way bill, I may not be having the details of the vehicle number, all those things basically. Those things can be filled separately, either by the buyer or the seller or by the transporter if the details are available on the e-way bill. In case of transporter, if it's registered with the e-way bill portal. So in this way, we can minimize errors and at the same time avoid costly mistakes. Now, in this case, it is a small error, but unnecessarily it has resulted in litigation. Because penalty has to be paid and on penalty input tax credit cannot be availed. On penalty income tax deduction is not allowed. So it's a very costly mistake. So always believe in the concept of maker checker. So that will balance if any errors or mistakes committed that can be identified and fixed before the vehicle or the goods move out of the location. So friends, here I would like to take a pause here or stop it for the day. And if we have any questions, I'm happy to take it up. Yeah, any questions, friends? Any questions? If you have any questions, we can take it up here. If you do not have any questions, then we can end the session here because I have one more case law to discuss. But it's going to take some more time. That is the reason I'm not continuing that case law actually. So I'll share this presentation with the organizers. They'll share it with you all across. Hand over the session to the organizers.
So should we end the session now? Sir, you are on mute. We cannot hear you.
Yeah, sure. So one question asked is what is the implications in GST if an asset falls under either plant or machinery? See, keeping that Safari retreat judgment, I can take input tax credit on my plant or machinery, and I can also take input tax credit on my foundation used for the machinery. So there you can take input tax credit. But when it comes to the commercial buildings or the warehouses, that is where we have a question now. It has to pass through that functionality test. Then only on those items you can take the input tax credit. So one question here is whether e-invoice is mandatory at the time of removal of goods. When it is mandatory, why 30-day period is given for uploading on the portal? Sir, whenever e-invoice is generated, it gets automatically passed to the from e-invoice server to the GST portal. Only the user has to go to the GSTR one and import it. But the data is already transmitted. But here the context in which the government has given this is sometimes in remote locations, they may not have the net connectivity or goods must have been sent on sale or approval basis. For such cases, this period is given. But going forward, I'm sure that even this 30-day period is also going to be removed. Initially, when the e-invoice architecture is built in, they gave only T plus 1 day actually. Because of the request from the trade and industry, they given unlimited time. They reduced it to 30 days for 100 crores. Now it is for all the taxpayers. The question address given in the invoice and e-way bill is same, but the address given in the GST certificate is different. Is it considered as an error and penalty applicable? Sir, there are two different schools of thought for this. Whenever goods are moving out, nobody checks the address given on the registration certificate. But in such cases, I can say that it is not an error. But coming to the aspects of availing ITC, the goods or services must be received at the registered premises. If they are not received at the registered premises, there is a low hanging sword. The department can reject your input tax credit. So press release and notifications are different. So press releases, like we have the 54th GST Council meeting. Immediately after the council meeting, we have a press briefing by the finance minister or some senior executive from the finance ministry, and subsequently whatever has been briefed is given in a press release. That is only for an information purpose and clarity purpose. Whereas notification, it is under the provisions of the act passed in the parliament or legislative assembly. These notifications are issued and they are binding on the taxpayers as well as on the departmental officers. So we cannot treat press release and notification at the same par actually. So I'm able to answer questions which are related to the topics what we have discussed. I could see some questions not related to the topic. Because of the paucity of time, I'm not discussing it here. I'm sure that many of you have my mobile numbers. You can message me directly. Yeah, over to the TRD.
So we thank you for your time and your knowledge sharing in this session. We are very glad for you to have this session, and we will look forward to many such sessions from you, sir. So we will end
Sure.
the webinar now. Thank you so much, sir.
Thank you. Yeah, thank you all.